All right, so today we're going to break down a really interesting retirement puzzle. You know the one. How do you get to the money that's tied up in your house, but without saddling yourself with huge monthly payments? Well, a new kind of financial product is aiming to be the solution.
So let's paint a picture here, one that's super common for a lot of folks. We're talking about being house rich, but cash poor. What does that mean? It means you've spent decades building up a ton of value, equity, in your home, which is amazing. But when it comes to actual cash for daily life, or maybe a trip or those unexpected bills, the bank account is a little thin. It's a real classic retirement bind.
So to tackle this exact problem, the reverse mortgage company Longbridge Financial has teamed up with a fintech lender called Figure. Together, they've launched a brand new type of home equity line of credit that's built from the ground up for homeowners who are 62 and older.
So what is this thing really? Well, you can think of it like a mashup. It's a hybrid loan that takes the best parts of two different things. It's got the flexibility of a traditional home equity line of credit, a HELOC, but it blends that with some of the unique repayment ideas from a reverse mortgage. And the whole thing is designed for life after you've hung up your work boots.
Okay, so you might be thinking, how is this any different from a regular HELOC I could get from my local bank? And that is a great question because the distinctions are, well, they're pretty significant. The devil's really in the details here.
Right off the bat, a few huge things jump out. A normal HELOC, it often has a variable interest rate that can go up and down. This new one, it's fixed, which means your payments are predictable. But honestly, the biggest game changer is what you pay each month. Instead of paying both principal and interest, you're only on the hook for the interest.
Okay, let's really dig into that repayment idea, because this is the heart of the whole product. For as long as you're living in your home, you just have to cover the monthly interest on whatever you've borrowed. The big loan balance, the principal, isn't due until a major life event happens. We're talking you sell the house, move into a care facility, or pass away. Now, there is a catch, of course. You absolutely have to stay up to date on your property taxes and your homeowner's insurance. That's non-negotiable.
So let's look at the hard numbers. You can get a line of credit anywhere from $50,000 all the way up to $400,000. You've got a 10-year window to actually pull money out, and you can do that up to 25 times. Now, this last one is super important, so listen up. You have to take at least 80% of the loan amount right at the beginning. That tells you something, right? This isn't really for little emergencies here and there. It's designed for a big, planned cash infusion, like paying off old debts or funding a massive home renovation.
All right, so you've got the details. But who can actually get their hands on this? Let's walk through the requirements to qualify. First things first, let's talk credit score. The absolute baseline, the starting point to even get in the door, is a FICO score of at least 660. Okay, so once you clear that credit score hurdle, they're going to look at a few other financial bits and pieces. Your debt-to-income ratio, which is basically just how much you owe every month compared to how much money you have coming in, has to be 50% or lower. Then there's the loan-to-value. Everything you owe on the house, including this new loan, can't be more than 75% of what it's worth. And last but not least, you need to have owned your home for at least 90 days.
And yeah, the kind of house you live in definitely matters. For the most part, we're talking about pretty standard homes here. Your single-family houses, townhomes, condos, that sort of thing.
And on the flip side, it's just as important to know what doesn't make the cut. So this loan isn't for co-ops or manufactured homes. And there are two really big rules. You can't get it if your house is already on the market, and you can't have this on top of a reverse mortgage you already have.
Okay, this next part is a biggie. This product is not available everywhere yet. From now, it's only being offered in these 13 states. Longbridge says they plan to add more states to the list, but as of right now, you have to be a resident of one of these places to even apply.
All right, let's pull all this info together and zoom out. Like with any financial tool, there's the good and the, well, not so good. You got to look at both sides of the coin.
So, the big win here, the main attraction, is getting access to a pretty hefty chunk of cash, up to $400,000, with these really manageable interest-only payments. That payment structure is the key. It's specifically built so that seniors who are on a fixed income might actually qualify, when they'd probably get turned down for a more traditional loan.
But on the flip side, there are definitely things to watch out for. The fact that it's not available everywhere is a major roadblock for a lot of people. That $50,000 minimum is also pretty high. This isn't for someone who just needs a little bit of credit for a rainy day. And the most important con you have to think about is that big payment at the end. That full loan amount will come due, and that's a massive financial event that you or your family will have to deal with down the line.
Let's step back for a second and think about what this all means. This product isn't just some random new loan. It might just be a sign of a real shift in how we think about paying for our retirement years.
You know, the CEO of Longbridge, Chris Mayer, really hit the nail on the head with this one. He's pointing out a huge gap in the system. See, most traditional loans are built for people who are still working and earning a steady paycheck. They just weren't designed for someone living on a fixed retirement income, even if that person is sitting on a gold mine of home equity.
In this next part, this really sums up the whole goal here. It's about giving seniors the freedom to use the value they've built in their homes to actually enjoy their retirement. To live more comfortably instead of having to be cautious and pinch every penny. It's all about using an asset you already own to make your life better right now.
So, what does this all leave us with? Well, a really big question. Is this new HELOC just a one-off, a niche product for a few people? Or is this the beginning of a whole new trend? Are we going to see more of these hybrid loans pop up, all designed to solve the unique money challenges we face in retirement? I guess for now, only time will tell.